All right. Hey guys, good afternoon. This is Seth Maniscalco, Crypto Wealth Coach. Thank you for joining. I'm going to go through another chalkboard chat today. And I'm going to preface this one by the expectation, the thinking that it might actually be one of the most important videos you ever see on predicting the rise in Bitcoin and the crashes in Bitcoin. They're going to happen on a 4-year cycle, basically up until your death, quite possibly. Okay, so most of you know and understand that Bitcoin runs through a 4-year halving point. Every 4 years, the rewards that the miners get for confirming and supporting the Bitcoin network are cut in half. Every 10 minutes, when Bitcoin initially had started back in 2009, the miners who secured the transactions and the network, basically the computers, the nodes, would get every 10 minutes a reward of 50 Bitcoins. Everybody competes for it. Whoever answers that mathematical algorithm problem first gets that 50 Bitcoin. And every 4 years from 2009, since Bitcoin was launched by Satoshi Nakamoto, it gets cut in half. So we've gone from 50 BTC down to 25 BTC. Currently today, right now, we are in the 12.5 BTC range. So every 10 minutes, the miners get, or whoever answers that mathematical problem first for a block in the blockchain, gets a reward of 12.5 Bitcoins. The next halving point is scheduled to happen in May of 2020. And at that point, the rewards will be cut from 12.5 today down to 6.25 BTC. And this cycle continues every single 4 years. I didn't put all the numbers in here, but all the way until 2140. That should be long beyond your lifetime and my lifetime. This 4-year cycle continues till 2140, when the very last Bitcoin will be mined. And of course, at that point, it'll be a fraction of a Bitcoin, but this is the cycle. This is called the Bitcoin halving cycle. And why is this important? This is very important for us as investors in the cryptocurrency market, specifically to Bitcoin. You can't necessarily apply what I'm going to talk about here today to the other coins. I'm not going to name names because I'm going to post this one publicly, but if you're in my group, you know I've posted several coins this month already. You cannot apply this strategy to those other coins. Please understand this is for BTC Bitcoin. All right, this is a proof of work setup that runs every 4 years for Bitcoin. There are other coins that are proof of work and have similarities. I want you to focus and keep your attention on the fact that this is for Bitcoin today, okay? So now that you understand and have a big picture concept of how the rewards work for the miners who secure the network, what I want to talk about next is how we can use this and apply it to future predictions of prices. And right now we are currently at an ideal point. We've already hit that $3,200 price point, and as you well know, we've been skyrocketing up. Last price was around $11,000. If you go back and you look at the history of Bitcoin, and this is not an exact chart. I have not drawn this to scale. This is on my chalkboard at home. So please give me a little leeway and don't beat me up because it's not a perfect picture, all right? What I want you to understand conceptually is some of these high points and low points specific to the mining periods and these halving points of what has happened with the price of Bitcoin. When Bitcoin first came out on the market, it was priced at around 6 pennies. I got a little cent sign there. I don't know if you can quite see it, but this is 6 pennies. It went and jumped up to around the $30 level. It then came back down to around $11. It took a skyrocket up to $1,200, $1,200. Then again, it dumped down to around 151 bucks. Then we went from 151 bucks all the way up to $19.8 thousand, right? Most of you probably remember this. This is fresh in your mind. Either this was a good thing for you or it was a painful experience, because what happened? The last year, 2018, we spent going down to around $3.2 thousand. Everybody is trying to figure out, what's this high price, right? We went $30 here. We went 1.2 here. We went 19 point here. What's that next price that's going to happen up here? And I should put a question mark up here. I think you guys can see that, right? So what is this price up here? Everybody wants to know what's going to be the next high point of Bitcoin, right? Because this cycle is very predictable. Nobody can predict it with any kind of precision, but what we know, and you could almost scratch out this first cycle because it was the first halving period of Bitcoin. So nobody knew what was going to happen. It was an unknown factor at that point. But what has happened in the last two cycles since is a repetitive pattern. And what we call this in technical analysis terms, we call this pattern the cup and the handle. A cup and a handle. This cycle where it goes from this high of $30, dips down to 11, comes back up over here, $30. And then what you will see is once we get to this point, people will take their profits before it goes back up to that next level. So there's a dip before it comes back up. And this right here, this point is called the handle. This is a cup. Again, not a perfect picture cup, right? But bear with me here. And then this profit taking that happens over here is called the handle, because essentially what happens is all the people who bought in Bitcoin at $30, at $1.2 thousand, and again you can draw another handle up over here at $19.8 thousand, what we're going to see is that same handle. So everybody who bought Bitcoin over here when it was FOMOing, right? It was all over the news. Everyone's talking about Bitcoin. Oh my gosh, Bitcoin this, Bitcoin that. All this stuff happened, right? If you've been in the market for a year, you remember what was going on in December and January of 2018 and January 2019. Everybody and their brother was talking about Bitcoin. Your mom was talking about Bitcoin. The barber was talking about Bitcoin. It was everywhere, right? It was a hysteria, and it was FOMO. So what happens at these certain points? When Bitcoin goes and hits this low and then comes back up, all these people who bought in at these high points, right? $30, $1.2 thousand, $19.8 thousand, they start to take their profits and the price dips. So this is the profit taking, and this is called the handle. You've got the cup and then you've got the handle. All these folks who've been sitting in here with this cycle for 3 years, right? They bought at this high point. They've been sitting there for 3 years. They held on to it. They didn't sell it. As soon as it gets back up to this, this high point, and that's why I drew a dashed lines over here, if you can see the dashed lines, they take their profit and they say, oh, thank goodness, I can get my money back out of Bitcoin and not have to tell anybody that I lost money on Bitcoin, right? I broke even. All these people are happy. What these folks do not understand is that historically this price has taken off after that point, right? The folks who got in at $1.2 thousand, they rode it through this miserable 3 years. You hit a low point of 151 bucks. Then it started coming back up. They recovered at 1.2 thousand. The price dips, and then it skyrockets. So it went from 1.2 thousand to 19.8 thousand. Over here, $30. It went from $30 and it took off for $1.2 thousand. So how can we use this to apply to the future price of Bitcoin? I'm trying to stay on the screen here so you can see, right? So in December, we hit this low point of about $3.2 thousand, right? We went from the high in December 2017. We hit the low in December 2018, and now the price is coming back up. Right here, we're I don't know, give or take, right around here is $11,000. All right, so you can, with almost sure certainty, you can predict that Bitcoin is going to come back up. It's going to hit this $19.8 thousand. The folks who bought in over here, and we've got some folks in this group who bought in at the absolute high, who maybe have been sitting on this and are thinking, okay, as soon as I can break even, I'm going to sell my coins, I'm going to get out, and I'm going to dodge, right? Well, this is going to cause a dip in the price before it takes off again. That's the handle. You've got this cup, like a cup of coffee, right? Like you got your coffee mug, and you're going to have some sell-off over here once we get back to around 20,000, give or take, and before it starts to skyrocket and get to the next point. So mathematically looking at these numbers, I think from $30 to $11 is somewhere in the neighborhood of 67% for the price, as far as the price drop from $30 to $11. From $1.2 thousand to $151 is I think it's about 87%. Okay, and then from 98,000 to 3.2 thousand is right in the neighborhood of 84%. So again, kind of throwing out this first cycle because the prices were so low, nobody really knew what to expect. Averaging these other two cycles that we've been through, and again, we've got a pattern here, it's roughly around 85%. So some of you are sitting there thinking, oh, okay, now I can predict what the dip is. But we don't necessarily want to know what the dip is. What we want to see as investors, and I need you to flip the script here and think backwards. We're not looking for this high price. What's Bitcoin going to go to, right? This is what everybody wants to know. Well, stop that. This will help you think about how to predict this and when to take your profits and be calm in the market and have rational thinking when this takes off in the next 18, 24 months. And everybody, you know, the news is talking about it, your barber's talking about it, grandmom's talking about Bitcoin, whatever. When that hysteria hits again, you're going to have a calm and collected mind because you're going to understand that we're not looking for this price. What we actually want to pay attention to is the low price. Why am I bringing this up? From $11 to $151 is, what is that? That's about 15x, right? That may not be perfect. Again, bear with me here, but from $151 to, here, let me put a little line. All right, so from the low point, 11 to 151 is around 15 times. From 151 to 3.2 is about 20 times, 20x. So if we are, and from 6 cents to 11 cents, I'm not even smart enough to figure that out in my head. I'd have to punch it in the calculator. But we're going to, you know, disregard this first cycle. What we're looking at are these two other cycles that we know have happened. So mathematically, from the low point of 3.2K, even if we take these two numbers, 15x times 3.2 would be about $48,000. Right, 48,000. I think, can you guys see? Yeah, you can see that. 20x times 3.2 is about $60,000. Extra zero in there. So $60,000. So, you know, it's probably going to fall somewhere between these two. And again, what am I talking about here? I'm talking about this next low point. So when the market takes off and everybody, you know, the market reverses and it dumps back down to this low point, we can predict with reasonable, you know, speculation that this next low point is going to be in the $48,000 to $60,000 range. So how does that look on our picture, right? Now we're talking this repetitive cup and handle pattern, which means our next point over here is going to be 48 to 60,000. Excuse me, I said that wrong. I'm sorry. The next point here is 48 to $60,000. So when this dumps back down and we hit our low point right here somewhere, it's going to be in this neighborhood with reasonable speculation. Again, I don't have my crystal ball, but using patterns that have already established themselves and a well-known technical analysis called the cup and handle pattern, $48,000 to $60,000. So how does that picture look on that next cycle? That means this number is going to be, you know, $60,000, right? That next cup cycle is going to be here. That could put this price up here anywhere from $60,000 to $100,000. You guys, yeah, you can see that. So between $60,000 and $100,000 is the next most rational take profit point you should be thinking about on this next bull run. Right now we're sitting at around 11x. So 11x to 48,000 is roughly a 500% return. It's a little bit less than 500%. But within good reason that you're going to, if you buy Bitcoin today, and actually I'd recommended that you pick it up under $10,000 if you've been following the group. So hopefully you were smart enough to do that, and that actually would be a 5x. But within reasonable, speculation, that is the price point you're going to be seeing, and then it could very realistically go higher. There's other factors in the market that have caused this number to skyrocket. Part of that is the government and finances and how they're currently handling that in the world. One of the big ones that took off over here was what they call a bank bail-in. And this happened in Cyprus, which is what helped Bitcoin go from $11 to 1.2 back in 2013, was the bank bail-in. Basically, all the folks who lived in Cyprus had their money in the bank, on a Friday evening. Over the weekend, they woke up on a Monday, they had 50% less money in their account than they did on that Friday. And then the banks locked it down. They weren't able to get their money out for several weeks, with an exception of like $150 a day, because people panic, right? The banks know people are going to panic when you take 50% of their money. The natural impulse is going to be to go out and take all your money out of the bank on that Monday, not trusting them. And they know this is going to happen. So anyway, that's do a little bit of research on the history there. So that could very well happen. That could be a predictable. We all know that the financial markets are unsteady. The governments can do a lot of things. If other countries do something like this, it may cause this number to go a lot higher. And I believe that's where John McAfee has come up with some of his crazy $500,000 $1 million numbers, is based on some of those factors triggering in the market, and then everybody going and scattering to buy Bitcoin, and that causes an absolute price skyrocket to happen. But again, here's what we're looking for. We're looking for this 15x to 20x in the $48,000 to $60,000 range. It's going to dump back down to that low point, historically speaking. So I hope this made sense. With the halving points, this becomes fairly predictable. What we're looking for, it would be an easy bet for $60,000 to $100,000. And from the current price of, again, if you bought in before that $10,000, you're looking between 600% and 1,000% on Bitcoin. When we get to this point, think about taking profits. Do not get caught up in the hysteria of, okay, is it going to hit 100,000? Is it going to hit 200,000? Is it 250,000? Take some profits off the table, because when this is all over the news, people are losing their minds. They're getting second mortgages out on their house, all that crazy stuff that happens. You will have a calm mind, and you will understand this cup and handle pattern and how you can apply it to know when to sell and when to buy back in, more importantly. All right. So thank you very much for joining my chalkboard chat. I hope this helped you a little bit. And if you've got any questions, feel free to put them down in the comments there below. And I hope you all have an outstanding day. Thank you.